Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thanks once again for tuning in and watching. I'm going to get into the CREA stats this week for the national statistics for April. First, I'm going to start with some trash talking of the government, starting with the inflation rate. Nothing really to report here, just that it went up 4.4% for April, higher than expected. And of course, you'll hear all about that all over the media and news today. Next, I want to talk about the real problem in the housing market that I've mentioned many times. I'm going to start with this guy, Ahmed Hussein, I think his name is. I think that's how you say it. Canada's housing minister quietly buys another rental property. The minister in charge of ensuring Canadians have affordable housing has quietly purchased his second rental property. In Housing Minister Ahmed Hussein's disclosure statements, he is now listed as the owner of two rental properties in Ottawa, one on Quest Private and another on Kajik Crescent. He appears to have acquired the second property on March 23rd, 2023, and has two mortgages with CIBC. So there's many members in Parliament that actually own rental properties and investments. I think it's like 1/3 of the Liberal cabinet or the cabinet ministers right now own rental properties or investment properties. The opposition do and whatnot. But I'm picking on this guy because he is the housing minister that's in charge of housing diversity and inclusion. I think they just linked or grouped a bunch of things together for his title. But again, housing is the first thing in his title, and he's responsible for this. So this is why I'm going to pick on him, because I believe that, overinvestment in real estate is the reason that we have no inventory and that helped prop up prices to their all-time highs. And according to rentals.ca latest report for May 2023, average rents are up 20% since the pandemic low. And in Ottawa, the average rent is $2,100 and has gone up 15% since last May. So it seems like a very lucrative business right now, being a landlord. And of course, the minister and the government in general, they're supposed to be looking out for Canada's best interest or Canadians' best interests. And the housing minister should be looking out for Canadian homeowners or renters' best interests. And of course, it looks like he's looking out for his own best interests, because owning a property, investing in a property, the ultimate goal is to make money and put money in your pocket, not help out Canadians, right? He's not helping out Canadians. In one of the reports, or his office said that he rents at below market rents, but I think they didn't really expand on that. So I'm thinking they just averaged out the two of his rental properties. Who knows when he bought the other one, which is probably below market rents, current market rents, but not when he rented it. And they probably just made that statement fitting in his defense, right? And let's take a look at what his mandate is, being the Minister of Housing and Diversity and Inclusion. Now, I'm not going to read through the whole thing, but just a few key points. As Minister of Housing and Diversity and Inclusion, your overreaching goal is to ensure Canadians can get a home of their own. So that's to ensure Canadians can get a home of their own, not for you to get more homes. Developing policies to curb excessive profits in investment properties while protecting small independent landlords. To help make it easier for renters to get on the path to home ownership. So in his mind, he thinks he's helping by buying some of Ottawa's inventory and then renting it back to the consumers. He's helping them rent until they buy a house. And I think this is the way he thinks about it. So by purchasing second and third properties when inventory is at a 20-year low, the minister is therefore making the path to home ownership a lot easier for renters. Anyway, this kind of just again, it's one of the things I always talk about, overinvestment. This guy's part of the problem. He's supposed to be looking out for Canadians, and he's actually buying up the inventory for his own self-gain. He's not doing what's best for Canadians. He's taking care of his own personal finances first, in my opinion. Before moving on to the national stats, here's a quick look at my favorite new shirt. You may be able to find it somewhere on YouTube. I'm not into selling merch, but it is there. Demand continues to outpace supply as Canadian home sales jump in April. Statistics released today by the Canadian Real Estate Association show national home sales jumped by double digits on a month-over-month basis in April 2023. Home sales recorded over Canadian MLS systems posted an 11.3% increase from March to April 2023, foreshadowed by smaller back-to-back gains recorded in February and March. Following the trend seen in recent months, the sales increase was broad-based, but once again dominated by the BC, Lower Mainland, and Greater Toronto area. And looking at it on the chart here, you can see that sales have risen significantly in the last month, still well below the 10-year moving average, though. The actual, not seasonally adjusted number of transactions in April 2023 came in 19.5% below April 2022, a markedly smaller decline than those seen over the past year. These next couple of comments is where I think it gets really interesting. Over the last few months, there have been signs that the housing markets were going to heat back up this year, so it wasn't a surprise to see things take off after the Easter weekend, which often serves as an opener to the spring market, said Larry Surqua, CREA's 2023-2024 chair. The issue going forward is not new. Demand is once again returning at a scale that is outpacing supply, with interest rates at the top and home prices at the bottom. All right, let me just pause there. So they're claiming here that interest rates are at the top and home prices are at the bottom. So I don't know where they get their information from or if they have inside information, but it's a pretty big statement considering inflation just ticked up today and the Bank of Canada has been threatening that they may have to raise interest rates higher. It wasn't all that surprising to see buyers jumping off the sidelines and back into the market in April, said Sean Cathcart, CREA's senior economist. Supply, on the other hand, has been sluggish, hence the price gains from March to April seen all over the country. Looking ahead, the first week of May did see a big burst of new supply. That's an important note. I've seen many reports from many realtors in many areas in the country saying the same thing. They've seen tons of new listings come on the market in May, and we're already seeing a reflection in the prices, suggesting some of those April buyers were exiting owners now looking to sell their current homes. That could make for a kind of virtuous cycle that might ultimately get more first-time buyers into the ownership space this year. I'd be very cautious if I were you, first-time buyers. The number of newly listed homes edged up 1.6% on a month-over-month basis in April, although the bigger picture is that new supply remains at a 20-year low. Okay, let's check out some more charts. So here is the national new listings, seasonally adjusted, and you can see, yeah, still very low in April. No big surprise. Sales activity wasn't bad. It's not at an all-time low. It has increased. Again, I've said it many times, it could only go so low, and I was proven wrong and for many months, but it is starting to increase now. And the April year-over-year price change compared with last April, Alberta is pretty much even. Everywhere else is down, except for Newfoundland had a 4.5% or so increase year over year. In the blue columns, the months of inventory has dropped back down. It's at about 3.3 months of inventory nationally. It was 3.8 last month. I would expect it to increase now coming into late spring and summer. And here is the national price. I'm going to show you now on my own chart using the same data. So the average price in April increased 4.4% month over month, or $30,000. It was down 4% year over year in April, or $30,000. And it's down 12.3% from the peak, or $100,000. So in January, we were down over $200,000. So half of the losses have been recovered, but we're going to see where it goes from here. And of course, we now have a perfect head and shoulders there, but we also have a major resistance level. You can see the resistance point is very precise. It was 716,000 each time, March 2021, October 2021, and of course now April 2021, and all times offered very strong resistance on the upside. And it looks like we probably know what's going to happen from here. All indicators are kind of pointing the same way right now. Lastly, before I go, I want to show you one more chart. This was also posted on my Twitter this week. This is just the ITSO Area 20 boards surrounding the GTA compared with the stages of the asset bubble. I have done this before, but if you look at where we are, it's like pretty accurate. It's a very strong correlation. And of course, we've just gone through that bull trap. We're in that return to normal. You've heard it in the media. You've heard it from other realtors. Things are back to normal. We reached the bottom. Off we go to the races. But in May, we're starting to see it flatline. I've already seen the data. I've been watching it closely. Actually, our average prices are coming down in May already. So it looks like we may be entering that downward movement into that fear stage. Of course, there's a lot of things happening in the economy right now, calls for recession and whatnot. So don't be surprised if you see this thing fall off a cliff very soon. There's no guarantees, but this is like a textbook scenario right now. I don't know how you can argue that it's not. Anyway, that's all for this week, and I'll see you next time.